Good morning. Welcome to AMCHAM Trade and Customs Committee's webinar on the topic of recent developments in Korean customs and implications. I'm Euna Claire Kim, Director of Government and Corporate Affairs at AMCHAM, and I'm very pleased to kick off the third webinar of the year for the committee. AMCHAM's Trade and Customs Committee aims to serve as a forum for AMCHAM members to identify and discuss trade and customs issues with experts from both government and private sectors. I'd like to thank our committee co-chairs, Katrina Chang from Kim Chang, Ari Ernest from Shin Kim, and Ronald Parks from Lee & Co. for their excellent leadership in driving the committee activities forward. Since 2000, global trade liberalization at the bilateral and regional level has been accelerating and is not likely to stop in the near future. While trade is growing and technology is developing, the risks are also increasing as well. To stay competitive in a global trade environment, companies need a smart strategy and understanding to navigate the latest customs-related developments and trends. In this regard, today's webinar on the recent developments in Korean customs and implications will be very timely in providing valuable perspectives to all of us. AMCHAM is committed to providing the most relevant and reliable platform for our member companies to engage the Korean and US thought leaders and to obtain the latest market intelligence. And I look forward to learning about the latest customs-related trends from today's webinar. I'll now hand it over to Ron Parks, Senior Foreign Attorney at Lee & Co. and co-chair of the Trade and Customs Committee. Ron will introduce today's speakers from Lee & Co., EY, and Kim Chang, and then we'll moderate a Q&A session after their presentations. With that, let me hand it over to you, Ron.
Thank you for that kind introduction, Ms. Kim. Good morning. My name is Ron Parks, and I'm a Senior Foreign Attorney with Lee & Co. I'd like to take this opportunity to introduce the topics today. I'll introduce the speakers individually before each presentation. We're going to cover a wide range of issues. First, a landmark customs valuation case, moving on to advanced customs valuation arrangements. Next, we have an update on the current trends of the KCS, and finally, a discussion of what can be called the BEPSification of customs, the impact of international trends on M&E supply chain management, and KCS's response to these developments. I'd like to introduce the first speaker. Jae-Wong Cho is a partner in Lee & Co. Customs practice with nearly 10 years experience. Prior to joining Lee & Co., he was a legal officer at the KCS and currently serves as an outside advisor to KCS. He will discuss valuation issues in Supreme Court cases and their impact going forward. With that, I hand the floor over to our first panelist.
Thank you, Ron, and thank you for everyone for sharing your very precious time to join here at the AMCHAM seminar. As per Ron's kind introduction, I've worked for several years for Seoul and Incheon Customs Office of KCS, in which I primarily was involved with the task of litigating and providing legal advice to customs matters, mostly for customs valuation. So as in this, because we have limited time and many important topics to cover, in today's session, I would like to highlight one important Supreme Court case and extend our discussions into how this court case could influence the future directions of customs administration and multinational companies doing business in Korea. So with this, I'd like to just share some screen on the slide for ease of presentation. Please let me know if there's any technical issues on the presentation. So as in the first page, these are just a very brief outline of what issues are frequently visited and questioned by the customs authority in Korea. Of course, we won't have enough time to cover everything, but the first two keywords, customs valuation and the challenges on the transfer pricing of import prices, would be the two important aspects. And I believe that one of our next speakers, Jason from Kim Chang, will be going into further details into the important aspects of the recent KCS trends. So I'll be moving on to the next part. This is a very simplified picture of the Supreme Court case I'd like to discuss today, which involved a multinational sportswear company which imported shoes and clothes and imported parts, goods items from a third-party manufacturer. However, paid royalties and various marketing fees to its overseas licensor. As seen in the details of the text and of the next pages, the importer is a Korean company, a Korea office of a multinational group. However, the licensor and the manufacturer, so the exporter, were different entities. According to the license agreement, the importer in Korea had originally been paying a lump sum amount of fee to its overseas licensor. But had renewed this agreement to a new contract in which the importer distinguished and tried to carve out portions of a pure royalty and the other part of a global marketing fee. And the global marketing fee was just abbreviated as international marketing fee, and was paid for various activities which were carried out, performed by the overseas licensor to increase the overall value of the sportswear's brand and trademark values. In this aspect, the main chief issue of the case was that despite the Korean importer paying customs duty and import VAT for the entire part of the old agreement's license fees, the Korean importer had adopted to alter this transaction structure so that it paid royalties only for the pure royalty and did not pay import duties for the global marketing fee. So because this inevitably resulted in a reduction of customs duties in valuation aspect, the Customs Authority of Korea challenged in the next audit that regardless of how the importer names or reports the title of the marketing fees, the marketing fees should be actually included as part of the royalty, which should be dutiable as a customs value. The chief issues are outlined in the underlined parts, and the royalties and license fees, as noted in the next sections of the Korean laws and the global valuation agreement. The royalties and license fees are not automatically levied customs duty and import duties, but rather the importer has to pay customs duty and VAT to the customs authorities only when such royalties and license fees are related to the imported products and are paid as a condition of sale. To rephrase, even if the importer pays royalties, license fees, or marketing fees, or whatsoever, they do not have the obligation to pay import duties to Korea Customs if such fees are paid as a separate, independent contract from the import transaction. However, in this Supreme Court case, the heavily disputed part was that first, from the importer's side, the importer had been arguing that the new agreement had clearly distinguished the royalty part and the non-royalty part, and therefore the importer did not have to pay the non-royalty section of the fees. And while on the other side, the customs authorities argued that even if the importer names an international marketing fee differently, in actuality, it should be regarded as part of the royalties related to the imported products. Another interesting aspect was that, as pointed out in the slides, the Supreme Court had went into legal analysis of the so-called substance over form rule, but unlike its original inception of the legal concept, the substance over form rule was interpreted in a strict manner to the taxpayer, so that actually this rule was used not to defend the taxpayer's rights, but rather to justify the customs authority's taxation. These are just summarized excerpts from the laws, and I'll be just moving over these because I know that we don't have sufficient time to cover too much detail. But so these are the chief arguments that Korea Customs argued that this international marketing fee was actually part of royalty. And as per the arguments, they argue that as a result of the importer paying this international marketing fee to the licensor, the overall value of the imported products and their net sales increased. And the calculation of the fees were also done based on how much products were sold per net sale, rather than based on an abstract general service agreement. And as this is a bit going into a bit of a detailed facts, but the history, the past history that the importer had been paying import customs duty and import VAT to the customs authorities for the entire full part of the old license agreement was also considered in a negative aspect when reviewing the case. As can be seen, well, this was a bit of a, this involved a complex customs valuation issue, so that the importers appeal that the customs duty and VAT should not be imposed on the international marketing fee was heavily disputed, and the first, second, and third final court of instances continue to change their positions on judging whether the customs authorities' taxation should be justified. And the final case in the final ground of the Supreme Court of Korea, the court case was judged that the international marketing fee should be taxed import duties as actual royalties, because, as mentioned in the beginning, in substance, the new agreement had carved out the international marketing fee as separate from the royalty, but the royalty was actually paid in order to purchase and increase the value of the imported products. And these are the detailed fact findings of the court case. So, well, because I've already run out of my time, I'll just quickly go through a 1 minute recap of the case and how the next cases after this have been impacting Korean importers and global companies. So in this Supreme Court case, the court bench have pointed out two important points. The first is that from a customs valuation aspect, international marketing fees, service fees, or whatsoever that are paid by the importer to a global licensor should be included in the customs duty value if such agreements are relevant to importing and pricing and increasing the revenue of imported products. And second is that even if the Korean importer alters the transaction value into a different form from a royalty, the new form of agreements could still be taxed as royalty if the actual substance of that agreement shows that the new marketing fees are paid somewhat related to importing and increasing the value of the goods. So the takeaways we believe that can be inferred from this case is that when structuring a license agreement or service agreement, first from a formalistic approach, it's recommended that the multinational companies doing business in Korea should clearly distinguish and document objective evidences for royalties and non-dutiable other service fees, so that they do not give the opportunity or the potential lead clue to the customs authorities when conducting customs audit, and minimize the likelihoods of increasing customs values. And second is that we believe that we should have a quick look at the other more recent court cases, which mostly were upheld and continued to justify this leading case that internet marketing fees should be included in import duties if they're actually relevant to the customs value. But at the same time, other subtle Korean court cases and appellate court cases, which also place a strict burden of proof on the Korean customs authorities. So combining this leading case and the subsequent recent cases together, I and the Lienko's customs experts believe that when structuring marketing agreements and defending them in a potential customs audit, we believe that giving a clear and consistent explanation to the customs authority, and if moving on to the dispute territory to the court bench, would be very paramount to in decreasing the risk in Korea. And I believe that, well, I've already covered the essential of the questions of this topic, but as a last reminder before I give way to our second speaker, I'd like to give a brief reminder to everyone attending this seminar today that this Supreme Court case not only impacted the customs valuation matter, but also has been giving a long-term effect on the BEPS and the OECD valuation guidelines for customs and import duties. So with this, I'll be turning over the mic and giving back the state floor to Ron to mediate the case. So thank you for listening to my quick introduction onto the recent important Supreme Court case.
JW, thank you for taking on a very challenging case to try to summarize in 10 minutes on a Monday morning, and no less. Our next speaker will be Robert Scott Smith, Senior Advisor, EY. Robert's a distinguished professional at EY with over 25 years of audit, global tax, global trade, and indirect tax experience. During the questions section, he'll be joined by Rachel Yeha-hyun, Manager of Global Trade at EY. Rachel advises on multinational companies, various customs issues, including tax audits, FTAs, and customs valuations. With that, Robert, I hand it over to you. Thank you.
Ron, thank you very much. AMCHAM as well, and everybody here for joining this morning. Great to meet you and talk to you about advanced rulings here in Korea. Where, as Ron said, Robert Smith with EY. I've been doing global trade, for about 25 years around the world, originally in the US as a licensed customs broker in our trade practice. I was in China for 15 years and I ran our Asia Pacific global trade practice, and I ran our Americas global trade practice. So having quite a bit of experience around the world, but also having worked in Korea a lot here. 안녕하세요, 여러분. 반갑습니다. So what we're going to be talking about for the next 10 minutes is really advanced rulings. I think as everybody here, if you've joined, you've probably had some experiences, or dare I say run-ins, with Korea Customs, and know that it's a very challenging environment once you get into processing your daily transactions, but at the same time, if you're actually having to deal with an audit. And once you have a post-entry audit, you actually are going to have to be, I think what you just heard Jae-won talk about, you're going to be in a situation where you're going to have to try and defend something that's already been put in place. Korea Customs is very aggressive in their audits. And so one of the things that you can think about is, are there some areas where maybe I want some certainty ahead of time? I want a ruling. Maybe I really need to understand my valuation and how Korea Customs will accept it, and a few other areas. So there's three types of rulings really that we talk about here in Korea. The first one we're going to cover is ACVA. ACVA is really a customs valuation agreement, very relevant for the case that we just talked about, what you're going to hear a little bit later as well. It is the hottest topic in almost every single audit, is customs valuation. So that is one area. You can get a ruling on origin, maybe very infrequently used, almost not used at all, really, for origin rulings here. And then product classification. If I have a difference, or maybe I'm not exactly sure how Korea Customs is going to accept my HS code, I can apply for an advanced ruling, and you can see sort of the processing time. Again, you don't need to do this all the time. This is not going to be for everything. However, if you really want to get some certainty, or you have a difference between duty rates, and you really just want to know what it's going to be, we can take advantage of that. So the first one is really ACVA. And this has been this has been one that's been progressing over time. When it was first introduced many years ago, I remember it was a great concept and a great idea, challenging implementation by Korea Customs. It was more of a rigorous audit than really a co-developed way to get a ruling. However, that has advanced now so that there are a lot of good outcomes in using an ACVA. You can really get, an approval of your customs valuation. You would get an exemption from penalties. So if you do get into an audit where you've actually got an ACVA in a way, if they find there's a difference, you can get away from the penalties. You have a better chance of securing your import VAT as creditable, which is a big deal. If you get if they go after your transfer pricing, they actually increase the price, you have to pay more import VAT. It can be substantial and has always been questionable whether you can actually credit that or not. In an ACVA scenario, you increase the chances of that recoverability. And then actually it helps in your AEO certification or process if you're going to go with AEO as a trusted trader program to help your operations in your processing transactions. The application procedure is kind of outlined below. It is a little bit of a lengthy process. A year and a half is kind of what we say. Just to give you an example right now, there's about 40, I want to say 38, but about 40 ACVAs in process that varying different companies and different industries have decided that they want to go through this process. Step by step, you're requested to provide relevant information, more information. Again, it's probably more proactive and more useful than when you're in an audit and they're demanding information. If you don't provide it, you're going to get a huge assessment. If you go through this process and get an outcome and an agreement through the ACVA, it is valid for 3 years, which is really, really nice for you're kind of protected from an audit period for 3 years. It is possible to extend that for 2 years. However, you almost have to say like the facts are the same, nothing has changed, everything is really exactly the same, so please extend it 2 years. We haven't seen that happen as much. You're going to have to provide some examples and some explanations on why it's very similar or why nothing's really changed to extend it. But if you can convince that, then you really have a 5-year period that you could be looking at securing your valuation through this ACVA. As we just heard from Jay Wong, you can actually have a pretty big audit case and a pretty big assessment that comes out on valuation. If you want to get ahead of the game and you really want to test your transfer pricing process with your customs valuation, this would be the way to do it. We are highly recommending companies to think about doing this more. So that's ACVA. The next one that I said is really the origin ruling. You can get an origin ruling. Sometimes this is really challenging when you have, I don't know, a multi-staged process, a manufacturing process where something's put together in China, it moves to Japan, it's assembled or put together, and then comes into Korea. What's really the country of origin? Or something's done in Mexico, it goes into the US, maybe a little bit of fine tuning or assembly is done in the US, and it comes into Korea. Is it a US country of origin where I can use Chorus to actually be able to get some free trade benefits? Maybe it's a huge piece of equipment or a gigantic part of a factory where the duty difference between origin of an FTA country versus non-originating for FTA would mean like, I really want to get an answer and secure this. Okay, we could go through an advanced ruling for origin. I do have to say, we haven't really seen many of these. I think most people have really tried to maybe understand that themselves. There is a lot of guidance on being able to determine country of origin. So this is another application and another ruling you can do. We just haven't seen it used as much in practice for companies actually really doing this. The next one is used a lot more, and this is product classification. I think everybody here, if you deal in the global trade world, trying to classify your goods is a science. Even a lot of our goods have advanced as far as what it actually is. Maybe the HS system is actually lagging quite a bit in the description. 8417, 8415, 8517, all of these kind of networking and computer equipment discussions or definitions are a little bit lacking. So you can have differences. I think it's this, customs thinks it's this. And if you have a difference in duty in HS code, it can have a big difference in duty rate. If it's a big product or an expensive product, or it's an ongoing product that you're going to be bringing in on large volumes, a small difference between 0 duty and 2 or 8% duty could be significant. So we are seeing a number of companies taking a classification ruling approach where maybe they've had issues in other countries around the world. Hey, we want to get pretty secure here. A few cases, for example, wireless Bluetooth headsets. Is it a telephone? Is it a headset? Is it 8517, 8518? A slight difference in duty, right? Maybe the next one, the insulated stainless tube, someone just wanted to know what is the right classification. There could be anything from anti-dumping duties or other things that influence that. And the last one, this connectors, there was a difference between 0% and 8% duty. So that could be big. That could really eat into your margin. So getting an advanced secured ruling around that would be really, really helpful. The process is outlined below. Again, you're going to have to provide enough information. Probably already, we say, come up with your stance already. Prepare a really compelling argument based on the HS notes, based on the explanation, based on chapter notes, based on maybe even previous rulings you have in other countries. Package that all together and then try and get this ruling. Again, probably 60, 90 days is the time frame there. Finally, look, you can't get a ruling on everything. It is really, really hard to get that ruling. Sometimes you do have to put some effort into it, but daily you have your transactions happening. You have goods coming in, you have goods being exported, you're dealing with your customs broker, you're dealing with customs. Importing and exporting really means you have to manage your transactions on a daily basis. Using maybe rulings sparingly, or many companies won't even use rulings. In managing your transactions, it is a lot about maintaining your data, keeping your transactions in order, having a system to do that. EY actually has a system called EY Trade Connect, where we help a lot of companies manage their transactions, be able to do data analytics and analysis on it, because that is probably the main part of running a global trade function, is managing your daily transactions, strategically using rulings from time to time. And Korea is advancing in being able to do rulings, as we've mentioned, ACVA and the other ones above. So maybe, hopefully, we've triggered some ideas for you to be able to think about, do I want to do a ruling? Maybe this is a situation where I should do a ruling. I think what you're going to hear a little bit later today, what you heard from Jay Wong about the case on license fees, is, well, maybe I should do an ACVA. There is a lot of ongoing disputes and conflict. That means, hey, maybe I should explore a ruling more than I maybe have thought of in the past. So hope that's been interesting. And Ron, maybe we'll turn it back to you to move on to the next section.
Thank you, Robert. The next speaker will be Jason W. Lee. He's a foreign attorney with Kim Chang. He's in the corporate practice and international trade and customs practice. Jason has over 20 years experience and advises multinational enterprises on a wide spectrum of customs and international trade matters. To keep us on schedule, Jason, I'm going to hand it over to you if you're ready to go. Please let us know about the recent developments and KCS interpretation and practice. Thank you.
Thanks so much, Ron. Hello, everyone. It's a great pleasure to be able to speak to you today. The topic that I'll be speaking about is recent trends in Korean customs interpretation and practice in the customs valuation area. While the first presentation went deep into the marketing fee issue, my goal for today is to provide a sense of how the administration and enforcement of customs valuation issues is evolving in Korea, and focusing on certain of the salient features and developments in this area in Korea to hopefully help you in your thinking and planning regarding customs valuation matters. I wanted to start with some general trends and developments first, as I think it'll provide some useful context and perspective for the slightly more technical discussions that will follow regarding some specific valuation-related issues. First, valuation continues to be a critical area of review for Korean customs, and challenges regarding customs valuation remain frequent. And valuation remains an area of important risk in audits and has potentially significant economic consequences for importers. As you all know, one of the challenges in the customs valuation area is that there can be ambiguity and room for differences of opinion regarding many issues. In addition, the landscape of legal precedents is always evolving, which can create additional uncertainty, and is also one of the drivers for Korean customs' ongoing efforts to try new and more sophisticated approaches to analyzing valuation issues and raising valuation-related challenges. Second, I'll be discussing this topic in more detail in the next slide, but after a setback in an important case that was decided at the Supreme Court in 2019 regarding the deductive value method, or method 4, as applied in Korea relating to the electronic system that Korean Customs used to select comparable companies. There was a period of time where Korean Customs avoided using method 4 to make impositions. Litigation is ongoing regarding method 4 or deductive value method issues. And so there's uncertainty regarding this imposition methodology from Korean Customs perspective as well. However, we do see them seeking to apply the deductive method approach, usually under the fallback method, also called method 6-4. And this remains an important risk for companies when faced with valuation challenges. And I'll be discussing that a little bit more in the next slide. Third, valuation issues have historically been and continue to be primarily administrative law issues. And so the practical consequence for companies has usually been simply, how much will the company have to pay as an administrative assessment? However, over recent years, Korean Customs has announced that it'll be increasing its efforts in the area of seeking out potential criminal violations of customs law, which in the context of valuation-related issues would primarily be related to duty evasion, which is a traditional issue, and price manipulation, which has the potential to cover a broader set of situations where valuation was manipulated in order to provide a party with an improper benefit. Fourth, while many companies think of Korean Customs primarily in the context of enforcement activities, one of the important missions of Korean Customs is trade facilitation. In the valuation area, Robert discussed the AQUA system in some detail. In this area, I think one thing to understand is that Korean Customs recognizes the uncertainty and difficulties that valuation issues can create for companies and has tried to promote the AQUA system as a way to help alleviate those issues. And moving the primary point of engagement for AQUA applications from the Customs Valuation and Classification Institute, also called CVCI, to the main customs offices was in part an effort to expand Korean Customs' capacity to review AQUA applications. One other thing is the UNPAS system can also help companies monitor their trade activities and identify potential risk, including things like price fluctuations or inconsistencies in the way that certain items have been declared at import. I think one other set of things to think about in considering the overall landscape is just related to changes in the regulatory landscape. There are two things that I wanted to mention here. One is under Article 277 of the Customs Act, Korean Customs had the ability to impose an administrative penalty of up to 100 million won on an importer if information that was requested regarding a affiliate transaction from an overseas party wasn't submitted. An amendment was adopted, which was adopted last year and became effective this year, and it permits the imposition of up to an additional 200 million won in fines. And the ability of Korean Customs to request this kind of information is broadly drafted. Typically, in an audit situation, the scope of information related to transfer prices and other valuation-related matters that the importer doesn't have on hand is negotiated. And in practice, the most important practical consequence of not submitting the information is a potential rejection of the transaction value. And this type of penalty measure is normally not employed by Korean Customs. However, we do think that the decision to amend the Customs Act to enhance the administrative penalties that can be applied is significant, and that it means that going forward it'll be necessary to see if and how Korean Customs practice changes regarding this issue. One other thing I wanted to mention here is that relates to VAT, since in many valuation-related impositions, the VAT portion of the assessment normally exceeds the customs duty portion. And an amended VAT invoice is only supposed to be issued if the facts fit within certain relatively narrowly drafted exceptions. The amendment to the VAT law that was proposed last year to make refundability of VAT for customs impositions the default outside of certain limited circumstances wasn't successful. I note that this amendment had also failed to pass the prior year. At the same time, though, KCS did issue updated guidance regarding situations in which VAT could be refundable earlier this year, and has helped provide some additional clarity about what additional situations and issuance could be appropriate. In addition, KCS also implemented the Taxpayer Protection Official System this year, which can hear requests from taxpayers regarding this issue, among others. And this has seemed to make the issuance of amended VAT invoices more frequent. But because the VAT law itself wasn't amended, we do think that we'll need to continue to see how practice in this area as well develops over time. I'm going to move to the slightly more technical discussion, and here I thought it would be helpful to first discuss at a high level the customs valuation method hierarchy and the interplay of certain issues that Korean customs could raise with Korea's implementation of the deductive value method, or method 4. First, I think everyone is familiar with the valuation hierarchy that is in the WTO valuation agreement and in the Korean Customs Act, which appears here on the left-hand side of the slide. Because for many companies and in many situations, identical goods and similar goods, method 2 and 3, can't be applied when valuing goods that many multinationals import. And because both companies and Korean customs historically had misgivings about trying to use method 5, the key valuation methods that potentially came into play in an audit were typically method 1, method 4, and method 6. With method 6 often being applied based on the deductive value approach, which is often referred to as method 6-4. A key to understanding the interplay of these methodologies is that unless there are some special circumstances that would make application of the deductive value method impossible, for example, there's no resale of an imported product, the regulations in Korea implementing the deductive value method, because they're based on points of data available to Korean customs without cooperation from the company, will frequently give Korean customs a go-to basis for calculating an alternative customs value. And these considerations are similar both in the context of method 4 and method 6-4, but there's some important problems for companies when Korean customs uses these methodologies. One is that it leaves a great deal of room, as we'll discuss in the bullets below, for distorted results that can generate unexpected large impositions. There's some screening criteria in the relevant notification in choosing the set of comparable companies, and I think there are a couple of things that are worth mentioning here. First, the initial set of potential comparables is based on companies importing the same class or kind of products. And the analysis of that starts with the HS code, initially at a 10-digit level, but this can be loosened to a more general level. And the key problem with this is that this is a much broader category of goods than identical goods or similar goods. And so the analysis starts with a much broader set of goods that could be very different from the perspective of market niche, cost, specifications, etc. Next, there's no filter to take into account certain characteristics of the business that's importing these products other than the stage of manufacturing or the stage of sale, which means that companies in vastly different business circumstances with different expense structures get pulled into the mix. Next, the representativeness of the ratio can also be further deteriorated by the fact that in terms of the same class or kind of products, they only need to represent 30% of COGS of the comparable company in the case of non-manufacturing companies, or 10% in the case of manufacturing companies, which means that there are a lot of other products in that mix, which can be wildly different from the imported products that you're looking to value. Because the ratio is also based on gross margin, again, different companies can have wildly different expense structures, and this creates difficulty. Finally, the last thing that I wanted to mention here is that when a deductive valuation method is applied, the valuation for each of the individual products is conducted, but then an imposition is made on things that are deemed undervalued, but there won't be a refund for the items that may have been overvalued. And so this magnifies the effects of applying this method. Fundamentally, this means that there's a great deal of unpredictability that's generated by this approach. And so for the first line of defense for companies is to defend the transaction value method, maybe with some additions or adjustments. But as we go down the valuation hierarchy, if the deductive value method is the next thing that Korean Customs thinks could be applicable, one of the important things that needs to be negotiated and is a part of a lot of discussions is how do we get past the deductive value method, go to the fallback method, and apply some approach that's not based on the deductive value method under the fallback method as well. So moving on, here, I just wanted to focus on a couple of things. There are some key differences between customs valuation and transfer pricing, and I think some of the things to note are that make it difficult, that create unpredictability. Customs value is measured at the import product level instead of the entity level. Customs valuation, in most cases, will reference gross margin instead of operating profit or EBIT. And then finally, even if you wanted to find alternative valuation methodologies yourself, there's limited information for you to do your own identical or similar products analysis or a method for analysis. Under even the transaction value method, in the first presentation, the marketing fee was used as an example of another adjustment, but there are a variety of other adjustments that Korean Customs actively reviews. And in connection with this, the one thing that I wanted to focus on here is TP adjustments. The past practice regarding TP adjustments this is something that Korean Customs is continuing to look at closely. The past practice was to make an imposition on the entire adjustment. There was a Supreme Court case in 2019, where the Supreme Court found that only part of the TP adjustment may have related to the products, and the rest of the adjustment did not. And so this was an important event. KCS also updated its guidance regarding TP adjustments to take into consideration a variety of issues, including this, but it hasn't provided as much clarity, I think, as we would have hoped. And so this continues to be a developing area. Well, one other thing is
Hi,
that—
Jason. I'm so sorry to interrupt, but we are running out of time. So if you could wrap up your presentation, appreciate it.
Sorry, I'll give me just 30 seconds. I'll wrap up. The other thing that on this slide is just increasingly Korean Customs is looking at substance over form, as was mentioned in the first presentation. And fundamentally here, the question is, was the payment actually for the goods and instead of for some other service or arrangement? And this actually relates to the last topic, which is the increasing focus on criminal issues. In the customs context, it's customs duty evasion and price manipulation. Price manipulation is much broader. It's the manipulation of a price in any filing regarding imports or exports that can provide an improper benefit to the importer or a third party. And what we wanted to note here is that this is an area where Korean Customs is increasingly active. And there are egregious cases where it's clearly fraud, but there are a lot of ambiguous situations. And what the key message that we wanted to provide to the audience is that it's important to have a logic and basis and support for any decisions you make about allocation of value regarding various arrangements, as well as the transfer price. And with that, I'll turn it back over to Ron. Thank you.
Okay, thank you for that very detailed presentation. Our last speaker is, last but certainly not least, Dr. Jung Hong Kim, partner and senior foreign attorney, Lee & Co. Tax and Customs Group. Prior to joining Lee & Co., Dr. Kim has had a long public career in the Ministry of Economy and Finance, Supreme Court of Korea, and OECD Korean Tax Center, where he is responsible for international tax and customs matters. Dr. Kim will discuss the BEPSification of customs. With that, I hand the floor over to you, Dr. Kim.
And good morning, everyone. I very much appreciate this opportunity to share with the distinguished panelists and the audiences my views about the impact of the new OECD framework on customs. Today, I'll focus on 3 points. Okay, first, BEPS project up to now, and second, the BEPSification of customs, and third, the developments in customs legislation in Korea, and I'll sum up. First, BEPS. BEPS is base erosion and profit shifting, and this is a global and more precisely OECD and G20 initiative to counter aggressive tax planning of M&Es. And this year marks the 10-year anniversary since its launch in 2012 with 15 actions, of which action 1 on digital economy taxation is pending and the others are being implemented. There are 141 jurisdictions participating, which means a global problem requires global solution. The state of play of action 1 is that a 2-pillar solution was agreed in October 2021, and the legal and technical work is still going on in the OECD. Specifically, Pillar 1 is about more allocation of taxing rights to markets. And the Pillar 2 is about ensuring minimum effective corporate taxation of 15% in each participating jurisdiction. And it is well known that M&Es are focusing on supply chain management, in which product design, R&D, material sourcing, production, distribution, and after-sales services are executed in one value chain. In this process, intangibles such as patent and trademark are key drivers for excess profits, and especially developing, enhancing, maintaining, protecting, and exploiting. With the acronym DEMPI of intangibles have been core business functions. In this regard, BEPS actions 8 to 10 on transfer pricing guidelines emphasize that DEMPI of intangibles must be consistent with substance of the activities or transactions. Then let me talk about the BEPSification of customs. The Korea Customs Service has been active in pursuit of high-risk M&E customs-related transactions since the OECD BEPS project was launched, and statistics show that more than 50% of customs duty assessment by the KCS concerned M&Es. In this context, in 2016 and 17, landmark customs valuation cases were decided at the Supreme Court of Korea. These cases related to local distributors of major sportswear M&Es, including the case presented by J.W. Cho. Here, the issue was the application of substance over form rule to customs valuation, as previously presented, in relation to international or global marketing fees, worldwide promotion fees, or sourcing service fees, and product development fees. The Supreme Court ruled that all these fees should be added as royalties to the price actually paid or payable, as prescribed in the Customs Act and the Customs Valuation Agreement, in view of the substantive nature of the fees. This is clearly in line with the essential underlying BEPS project, substance over form. In my view, these court cases are just the beginning, not the end. Customs legislation in Korea have become and will be ever more aligned with BEPS, specifically in 2 directions. First, The legislation is focusing on transparency and information gathering on controlled transactions. In 2013, Customs Act required the importers to provide transaction value determination documents on controlled transactions. And in 2021, as Jason appropriately presented, the Act introduced a reinforced penalty of up to 200 million won on no or false documentation after the importer has been ordered to correct the non-compliance. Also, Customs may request information from the National Tax Service on tax assessment on transfer pricing and international transactions reporting of taxpayers. Second, it seems that the substance over form principle will continue to apply to Customs. In other words, BEPS principle on substance requirements and reinforced income tax provisions will likely affect Customs legislation. For instance, shifting the burden of proof to the importer regarding Customs valuation may be reintroduced after the failed attempt in 2020 in line with principal purpose test rule of the Coordination of International Tax Act. If I may, I would like to close by raising 3 points related to the BEPS impact on Customs. First, BEPS is as much about customs duties as about income taxes. This observation is not surprising in that M&Es try to optimize their customs and tax positions at the same time. Second, the Ministry of Economy and Finance and the KCS will continue to strengthen legislation and enforcement measures to counter BEPS-related customs practices of M&Es. Third, M&Es should be aware of interactions between income tax and customs duties, especially in relation to supply chain management involving intangibles. In the sportswear Supreme Court case, in contradiction with the customs reporting, it transpired that the plaintiff recognized the IMF as a royalty in its corporate tax return. With this, I'll wrap up my session. Thank you very much. Ron, back to you.
Okay, thank you, Dr. Kim. Could everyone come on screen, please? We want to try to do a round robin of questions in the 8 minutes we have left, so that everyone gets their money's worth, as it were. Rachel, you've drawn the short straw, so you have the first question. And that question to you is, I understand that ACFA did not have the best of starts in the sense that it wasn't taken up widely. But do you believe that now they've, in essence, worked the kinks out? And do you see more clients embracing this and other rulings going forwards? Please keep your response to under 2 minutes.
Okay, so, well, yes, it is true that in the early years where the ACFA was first introduced, some of the customs authority would carry out the review rather as if it was a customs audit, asking for an extensive level of information and documents, and sometimes threatening to drop it if the company did not provide the right information that the customs authority wanted to see. Part of the reason they were doing it was because the ACFA applications were handled by a small number of teams at the Customs Valuation and Classification Institute, resulting in a lot of pressure on the small number of customs officers really who were handling. And they were basically not much willing to derive a meaningful conclusion that was supportive to the applicant company. On the other hand, we can say that the process is generally a lot more friendly now. The applications are now processed by one of the ACFA specialized teams from 5 main customs offices in Korea. And although, again, each team has different characteristics and styles on their own, but based on our experience, when we file in applications, the ACFA teams are working hard now to arrive at some positive or meaningful conclusion with the applicant company. They take clearly different perspectives compared to audits. That's what we observe. And for our many clients who have filed in ACFA applications, our discussions with the ACVA teams are going quite well. So we can say that the process is much better now, much better and much company friendly now compared to the past.
Well done. Thank you. A minute and 40 seconds. Next question will go to Dr. Kim. The question to you is, I was very interested in your topic name, the BEPSification of customs, and made a convincing argument. Even though BEPS is a tax concept and driven mainly by the OECD and G20, why do you think that customs will follow this, even though they're really under no obligation to do so? 2 minutes, please.
Yeah, that's a million-dollar question, Ron. Let me put it this way. In fact, there's a strong and some would say inevitable interaction between tax and customs for M&Es. This is even if there is no customs duty applicable under a free trade agreement. For BEPS purposes, the customs valuation of the goods imported should be the basis for the VAT calculation. Thank you.
Very good. A 30-second response, very concise. Okay, in this round robin session, the next question goes to JW. Kind of a two-part question. How important is this case in relation to KCS dispute strategy? Is it really a landmark case in your view? And second part is, do you expect similar disputes or perhaps other fresh KCS issues to arise? In less than 2 minutes, please.
Okay, I'll try. I'm not sure I'll be able to be quick as JH, but I'll try to keep punctual on time. So for the first part, I still have the same opinion as when I was presenting. So I'm certain that this Supreme Court case is a very important landmark case, not because there's no room for change and it's final, but rather because the customs authorities have been continually studying and analyzing this case as one of the leading cases to add marketing fees and other similar services fees to the import duties when conducting customs valuations and audits. And second, as for the second part of the question, I think this, of course, I do not think that the exactly identical cases will recur. However, as judging from my experience of working for and against the customs authorities, I believe that the customs auditors will have a tendency to try to benchmark and reach similar valuations and taxation attempts in future cases. For instance, if there's they won't be going after, they might not go after exactly the same international marketing fee, but they might try to look into and analyze other general service fees or counseling fees given by the Korean importers to the parent companies, and try to cite on the Supreme Court case's valuation logic of substance over form rule. So therefore, I believe that this case should be studied and referred to internally when we review and prepare legal analysis against customs audits. Thanks.
Thank you. Last but not least, Jason, in our final minute, do you anticipate KCS taking a more systemized approach to the various customs valuation issues across the organization, or whether it will be more dependent on the team reviewing the issue in a particular matter? Please close us out.
Thank you, Ron, and I'll keep it short. I think KCS is going to try to take as much of an organizational approach and a uniform approach to issues as possible. From time to time, they issue guidance. We talked about the VAT and TP adjustment issues a little while ago. In addition, there's continuous consultation within KCS in connection with audits and ACVA applications. I think, though, the problem is that it's so technical. This area is so technical, and it's very fact specific, and so small differences in facts can always change the result. And so I think the role of the audit team is still going to be primary in most cases.
Fantastic response, and that is time. I would like to thank all of our distinguished panelists for taking their time out to share their insights and experience with us. And thank you so much. We got through the whole thing in 1 hour. Very, very good. Yuna, are you there?
Yep. Well, I'd like to thank all of our speakers today for their very informative presentations and also very insightful Q&A session moderate by Ron. And also, as I mentioned, that we will have additional speaker series throughout the year for the Trade and Customs committees. So I hope that many of our audience will be able to participate in the upcoming events. And if you have any questions about our committee, please feel free to reach out to me as well. Well, with that, I'd like to thank again our speakers for today and thank you everyone for joining us. Have a great week ahead. Thank you.